Hello, folks. Welcome to the Sunday edition of the Satori Traders Precious Metals News. We're going to start out this week looking at Irving Resources. We're in the weekly time frame. Technically, not real exciting. Basically, we're down here at playing with the dollar level again, and we can see that it's been both support and resistance. That zone, that level was acting as resistance back in 2017, 2018. Price popped above, found support there a couple of times, and now we're back playing with that again. Looks like we've lost it as support, at least for now. Notice that based on accumulation distribution indicator, investors they're accumulating this stock. So regardless of this price action, investors are hanging on to this stock. Let's see, MACD is in bear mode on a sell signal, energy's in the tank. Now, some of the reasons that we might be interested in Irving are right here. The company is exclusively focused on Japan, and one of the interesting things about Japan and the mining industry is that there's been very little activity since World War II. During World War II, the mining industry in Japan was converted to wartime production, so focused on the base metals, the industrial metals needed for a country at war. And since the war, very little mining activity, exploration activity has occurred. So the vast amount of resources in Japan have not been explored with modern technologies. And so there's a lot of opportunity for resource explorers and miners in Japan. Now, one of the challenges that foreign companies face in Japan is that, Japan's not all that interested in having foreign mining companies coming in and exploiting their resources. If you want to mine in Japan, you need to be a Japanese company. And so Irving Resources, the founder and CEO, is Japanese and has contacts in the appropriate Japanese industries. So Irving has a real shot at being a successful long-term business in Japan. We've got Quentin Henney as a director. I always like to see that. They have a unique business model. What Irving is doing is they are focused on finding and mining high silica content gold ore. And that high silica ore is used as flux by the smelters. And Irving mines this high silica ore, sends it to the smelters as flux. Irving gets paid for flux and then receives about 90% of the value of the gold and silver content that's included in the flux. So it's kind of amusing to think that they're being paid for the flux, and the gold and silver is just byproduct. So, if you think that Newmont Mining know what they're doing at this point in the mining industry, in 4 of 21, Newmont bought another 3.7 million shares of Irving. That was $6 million worth. They've been involved with Irving prior to that. And Newmont is interested enough in Irving's success that they are providing technical expertise to Irving. They're out there in the field helping Irving develop their resources. In addition to the projects where Irving is currently exploring, they have 100% control of another historic mining district that has been essentially idle since 1940, World War II times. The company has a very small float. There's about 61 million shares outstanding, and then management holds a significant percentage of those shares. So there's a lot of positive things to be said about Irving. That's, from a technical perspective, we sure would like to have had the $1 level hold, but on a, value perspective, this company at $1 a share is worth putting on your candidate list. If you're buying mining stocks right now, give this one some consideration. Like I was saying, Japan likes to do business with Japanese companies. And so this Irving has this relationship with the JOGMEC, however you pronounce that. Anyway, this is a government organization working with the ministries of the Japanese government. Anyway, Irving is in good favor with the Japanese government, and part of their success story is that they're able to do business in Japan. If we go look at their presentation for investors, this is what I was saying. So the smelting industry in Japan, they use this silica-rich ore as smelter flux. And so Irving, I keep trying to say Irving, Irving will get paid for providing smelter flux and then get the money for the byproduct, silver and gold. Here's the capital structure. So we see 61 million shares, 66 million fully diluted. And we can see here, so managers and directors got almost 15%. Newmont's got 14%. Sumitomo, that's Japanese corporation, so the 20, 30, there's 30% of the shares. 30% of the shares are held by insiders, tightly held. These people aren't going to give up these shares, unlikely that they would. And so very small float in this company, which suggests that when they have some news that causes the stock to move, it may move quickly and dramatically. The reason I was looking at Irving today is that I saw in the news flow that they're about to start a drill program. There hasn't been a lot going on with Irving because of COVID. Basically, they haven't been able to do much of anything through the whole time of COVID. So anyway, it's good to see them coming back into activity. Here we are. Let's look at the charts. Gold in the monthly, still forming out the right shoulder of this head and shoulders pattern. Notice that price remains above the boundary of that right shoulder. In the weekly time frame, week prior, that is a super bullish bull hammer, doji, however you want to look at that. That's a big bullish candle in the week prior. Last week's candle is doji, waffling, buyers and sellers kind of at a stalemate, neither one of them willing to commit to a direction. Buyers aren't going to take it higher, sellers aren't going to take it lower, so we end up with just sideways waffling. But that's a fairly bullish chart, gold, in the weekly time frame. Here in the daily, I'd call this sideways consolidation. Price just bumping along. It's got resistance from the 50-day moving average. This 1794 is a support currently acting as resistance. MACD on a buy signal, down in bear mode, energy elevated. Gold's looking pretty good, just kind of bumping along sideways. Silver in the monthly time frame, so talked about this price bar in particular, and as investors, what do we do with that? Well, I'm out buying physical silver. I was at Friday and I'm buying 10-ounce bars at $3 over spot. That's how I'm treating that price action. It's an opportunity to go buy physical silver at $23. Well, of course, price is 23. So I paid 26. And in my opinion, physical silver at $26 an ounce, they're giving it away. They're giving this stuff away. And when it's $600 an ounce, like it should be, those of us that bought it at 26 will be happy campers. Here in the weekly time frame, we can see silver sitting on support at 23, energy in the tank, MACD on a sell signal. Silver in the daily, price just kind of gently heading lower because, buyers aren't taking it any higher. So we're sitting here above, what's that, 2250. So we can see that level has provided support several times, provided support there on that manipulative spike lower in both gold and silver. Nothing exciting in daily silver. The mining stocks, this is GDXJ in the monthly time frame. The same story last time we looked at it. Price has lost the 50% level. Next potential supports around 37 based on this Fibonacci retracement. If we drop down to the weekly time frame and look at, okay, where is 37? Well, that's this zone down here, and we can see that it was resistance, 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 support, support, and we'll see it looks like price is going to come all the way down here to 37 and test area for support. These already oversold, but no indication that it's turning up yet. Yeah, MACD histogram is not hinting at a bottom yet. So probably some more downside in the mining stocks based on GDXJ as proxy. Here it is in the daily time frame. We can see price, potentially sitting on support or testing support along the upper boundary of this price channel, 37 down below. Energy in the tank, MACD in bear mode. Mining stocks are not pretty in general. This is still the silver mining stocks. Again, price has dropped through this potential support zone. Now we have a lot of flexibility when we draw support and resistance, whether they're lines or zones. See, we could have easily drawn this support resistance level, and then now notice, Friday's price candle is a doji sitting on that support level, But again, where you draw support and resistance levels is very subjective. I just noticed volume picked up a little bit of selling action, which that's not bullish. Again, the mining stocks right now are not bullish. Let's look at the US dollar in, there's probably the weekly time frame. And so we can see with this recent strength, the dollar has pushed up and tested resistance at the median line of this Andrews pitchfork again, pulled back on the close Friday, and then we'll see what happens next week. This is a bullish chart, MACD in bull mode on a buy signal, bullish alignment in the moving averages, energy is elevated, that's a bullish chart. Daily time frame in the dollar, we can see this was the big push on Thursday. The dollar pushed up through that resistance level, and then on Friday appeared to test it as support. We might look at that as a breakout, and then a test of the breakout level as support. MACD in bull mode, energy elevated. No reason to think that the dollar's not going to head higher from here. And so if we were trying to trade the dollar or looking for, where might this price movement run out of energy, we can add the next median line extension to this modified shift pitchfork, and that's this red line up here. That's the first extension, median line extension of this mod shift fork. That gives us, 93.8, 93.9, something like that. Well, if price gets up to 93.9, it's almost certainly going to overthrow up to the round number at 94. Two indications there that 94 is a likely target. If we look at a Fibonacci extension of this impulsive price movement, that's an impulsive, very impulsive price movement there in the dollar. We get a strong pullback. We apply the Fibonacci extension to the three pivot points, the origin, that peak, the pullback, and the Fibonacci extension shows us where price might run out of energy. And we can see a one-to-one move gives us target at 93.86. And that's a third potential price target up here around 94. And so we've got a confluence of price targets up there at the 94 level. As traders, we could set that as our target to take profit or to exit, or we could look at that as a potential area to get short, expecting at least some kind of tradable pullback from that level, and we'll see what happens when we get there. This is interest rates in the weekly time frame. In my opinion, we're in a primary uptrend. This is the interest rate kind of bumping sideways. Let's drop down to the daily. This is yield on the 10-year note in the daily time frame. Choppy action lately. There's a lot going on. Investors are digesting the fact that we're headed back into global lockdowns. all of the story from the earlier part of the year that, Skittles and unicorns forever has changed. We're back in a different environment now. And I was just shaking my head, scratching my head last week, noticing people talking about the Fed may tighten in 2021. And of course, the Fed's never going to tighten. The Fed can't tighten. They learned in 2018 that they can't tighten. It always kind of surprises me when I see people talking about the Fed tightening. And I wonder, are you actually that deluded, or are you trying to delude me? Because, the Fed's not going to tighten. Anyway, Bitcoin is on a bullish move last week. We got this is the daily time frame. This is Friday. Bitcoin finally pushed through that resistance level. Didn't quite get the pullback. If you were a stickler about waiting for a pullback to the upper part of that support zone, the breakout level. Basically, it's the breakout level on this trade back here. If you were sitting here waiting for that pullback, it didn't happen. And you might be sitting on the sidelines at this point wishing you had a position. And, there are an infinite number of trades. If you're serious about being a successful trader, just know that there is always another trade. There's no reason to chase a trade. There'll be another one right around the corner. In the equities, more bullish action last week. This is the daily time frame. So we got a pullback to the median line of this mod shift pitchfork. Didn't make it down to the 50-day, and then a strong bounce on Friday. Energy mid-range, MACD in bull mode, currently on a sell signal. Dow, same thing, bullish bounce off of support at the 50-day and the lower median line of that Andrews pitchfork. Friday, it bounced up and dealing with resistance at this support, horizontal support resistance, and the 20-day moving average, bumping through or bumping into resistance at that horizontal level, and then the underside of that Andrews pitchfork, lower median line of that Andrews pitchfork. MACD histogram hinting at potentially a turn back higher. Energy low, but potentially turning back up. This is Brent in the daily time frame, and I may be fooling myself, but I like to at least have an idea of what could be going on in the markets. And so I think we got two factors affecting oil currently, and one of them obviously is the rising U.S. dollar. So all of the commodities that are priced in the dollar, when the dollar is strengthening, they face a headwind. And so potentially some of this weakness in oil is strength in the dollar, and then also investors acknowledging that the economy is slowing back down. Well, it never really speeded back up. That was all bullshit. But acknowledgement that the economy is slowing back down as we implement more lockdowns, and the facade, the fake economy that was based on stimulus, that illusion is melting away, in my opinion. All right, folks, I think I've done enough babbling for one day. I am going to leave you here. I will be back on Wednesday morning, and we'll see what's going on in the markets then. Have a fantastic week. Looking forward to talking